Hello everybody, welcome to Monday Morning Must Knows. My name is Merlin Rothfeld. Here are 3 important things to pay attention to for the upcoming trading week. Now before we dive into all the nitty-gritty details, let's talk about last week. Man, we talked about the inflationary numbers on Tuesday and Wednesday with CPI and PPI. And on Wednesday, that CPI number came out significantly higher than expected, which created a little bit of a shock in the markets. You saw some bond yields spike, great trading opportunities out there. And then you know what? We followed that up with that dollar gaining strength. We talked about that 2 weeks ago. Dollar getting higher and higher, uptrend, series of higher highs, higher lows, looking strong. What does that mean? That means that currencies like the euro or the pound showing some weakness and maybe some short opportunities. And lo and behold, midweek you saw the bottom fall out of those two and all of a sudden some great shorting opportunities. So let's see what we can find for the upcoming trading week. Now we'll start things off with our earnings calendar as we usually do. There are 429 companies reporting this week. We start things off with Tyson Foods and Advanced Auto Parts. Moving on to your Tuesday calendar, you've got Walmart, Home Depot, BH, Billiton, and NetEase. Wednesday brings you NVIDIA, the big day. This is actually the biggest day of the week in my opinion. You've got NVIDIA, Cisco, Target, Lowe's, Baidu, and TJ Maxx. So we're getting a little smattering of retail sales, which is very important for this upcoming trading week. Now, in the tail end of the week on Thursday, that brings in Alibaba, Applied Materials, Macy's, JD, Palo Alto Networks, and Kohl's. So more retailers entering the fray. And then we round it out with a couple of retailers, Foot Locker and The Buckle. Now, of course, some of these are major names like Walmart or NVIDIA or Cisco, but there's a lot of companies out there that are kind of on the fringes. This is getting into the tail end of earnings season here, but we have heard so much about the trade tariff issue. We've heard so much about supply chain disruptions, so we'll see how Walmart and Target perform this week. Now, moving on our list, we go to something that's actually very exciting. We start talking about retail sales. That's right, retail sales. As we approach the holiday season, there is so much talk, again, about supply chain disruption. We might start to get a little bit of a sense as to how that retail sales numbers might perform or how retail sales are going to look in the coming months by the next numbers. So let's take a look at our retail sales numbers. Of course, this is a nice little cartoony image here. I don't think you're going to see many sales. I don't see a lot of sales out there because inventory is so low. Why would people be selling it at a discount? All right, moving on to your chart here. Tuesday, 8:30 a.m. Eastern Standard Time, so 1 hour before the equity markets open. That's when that retail sales numbers will come out. What I want you to notice on the hard right edge of your chart here, you can see 2 different colored pieces. You have this blue vertical bars, and then you have these small little hash marks that look like they're gold. Well, those hash marks in gold are the expectations. And I want you to notice how they've been setting their expectations very low. They've actually made those expectations negative. Now, this to me is all part of a tactic, a strategy on the part of the data providers to allow the market to surprise us. Oh, wow, retail sales have been better than expected. And that is something that traditionally is used to, I'll say, goose the market, right? So if you set that bar so low, let's say you set your expectations for retail sales to be negative 0.1%, and we show up at positive 0.2%, the entire market goes, wow, we're doing so much better than we thought, and we get a nice little market rally. This is a very common tactic, and as you can see on this price chart here, it's been happening for several months. It's been 5 months in a row where they've set that expectation negative, actually expecting there to be a contraction in retail sales, and of course, we've come out positive 5 of those months. So I expect that to be the same thing on Tuesday. And lastly for today, let's talk about something we don't talk about too much, which is cryptocurrency. That's right, we're looking at things like Bitcoin, Ethereum, stablecoins, and all the different pieces that make up this decentralized finance ecosystem. Now, on the surface, you understand that this is a threat to CeFi, which is your normal traditional way of doing investing, banking, financial markets. DeFi changes that because it removes that central entity. So regulators right now are cracking down and really kind of imposing their rules, their will on the cryptocurrency markets. Now, on the face value level here, that should be pretty bad. And I do expect that we'll see some weakness in cryptocurrencies over the next couple of weeks. And of course, you can see here, this is the total market capitalization for cryptocurrencies, going all the way back into 2019. Now, we've gone from a couple $100 billion market cap to over $3 trillion this week. That's a major milestone. And what it does is it ushers in institutional investments. When you look at the markets, cryptocurrency has predominantly been a retail type of platform, meaning people like myself and you with our $5,000 or $10,000, $50,000 worth of crypto. But as this has started to gain popularity, you bring in institutions. And as you can see on this chart, it's really starting to accelerate its speed and trajectory to the north, meaning we should see greater market capitalizations. Why? Well, when institutions come in, they don't just buy $10,000 worth of Bitcoin. They're buying $500,000 worth of Bitcoin. And for you and I, as students of core strategy or supply and demand methodology from Online Trading Academy, what this does is it gives us a competitive advantage. Because by understanding the actions and the footprints that institutions leave in the marketplace, we can more effectively make our trades and our investments without taking on more risk. So it's a great opportunity for us having institutions come in. Of course, that also means higher prices going forward. Now, what about the price trajectory of crypto? Well, here's my forecast. I think what you'll see is some weakness in cryptocurrency. You'll probably see a pretty significant sell-off as this regulation is imposed on our markets. You'll see things against cryptocurrency, such as taxes. We have 6050I, the new Internal Revenue Code that has just been amended to include cryptocurrencies. It doesn't do a very good job, but the IRS is now slapping taxes on it and making sure there's some structure. Gensler and the SEC will be doing this as well here very shortly, and that should create some fear in the marketplace. It generally does, a knee-jerk reaction of, oh no, here come regulators. But this is actually a good thing. Think of regulation from the perspective of clarity. We now know what the stance is by the SEC or the government or these taxation aspects. So we'll start to get some clarity, and that calms a lot of the fears in the general public as well as institutional investors. That said, once we get that uncertainty out of the way and clarity, we should start to see some more upside movements in the crypto markets. But remember, crypto is extremely volatile, as you can see on this price chart here. There is so much price action and movement. I mean, 50% drops are not uncommon. So if you are involved in crypto, be very careful. Make sure you use risk management. That, my friends, is your Monday morning must-knows. I'll see you next week.